What's good, everybody? Spektrades back here with another YouTube video. In this video right here, this is one of the best and simplest liquidity strategies. I love this strategy right here. It's extremely consistent, it's simple, and it helped me become extremely profitable. So make sure you pay attention and take a lot of notes. We're gonna go over understanding liquidity pools, structure and intent, and then we're gonna finally go over the entry strategy, timing, and the zones. Make sure you like and subscribe down below if you're new here. Welcome to Spektrades. Let's get straight into this video. First, let's get into understanding liquidity pools. What is liquidity? Liquidity represents pending buy/sell orders stack above significant highs and lows. Liquidity is fuel. Every move is designed to collect resting orders. Buy side liquidity are usually above swing highs, breakout orders, and retail stop losses. And sell side liquidity are usually below swing lows, breakdown orders, and retail stop losses. A clear observation tip to always keep in mind is price often moves toward liquidity before reversing. This is where smart money enters. Let's go over the key areas of liquidity, right? We have our swing highs, as you can see right here, in our swing lows. A swing high and a swing low is a 3 candlestick pattern. As you can see, you have one low that is lower than the prior candlestick. Then you have another low that is lower than the middle candlestick, right? This right here makes this a swing high. It's the same for a swing low. We have one low that is higher than this prior low. Then you have another low that is higher than the middle low. So the middle low becomes our swing low. These are points of liquidity. Other points of liquidity is equal highs and equal lows. As you can see right here, price usually pulls down lower and aligns a low, right, with another candlestick low. This makes this an equal low. A lot of resting orders are hiding below these points. It can also be a equal high, right, where price pull back and align a candlestick with a prior candlestick high. This becomes equal highs. Other points of liquidities we have is our Asian swing high and our Asian swing lows, or it can be the London swing highs or the London swing lows. And if you're trading the New York session kill zone, it could be the New York session lows like the 930 open. That could be your area of liquidity. Let's get into some session context. The Asian session is the range creation. This is our liquidity buildup. It's not that you can't find trades during the Asian session. It's just that it's choppy markets. It's choppy price action that price is showing us. So the Asian session is just choppy and back and forth. The London session is our London session sweep. This is our liquidity collection session right here. This right here is where price gives us our strong manipulations, either of the Asian session highs or of the Asian session lows. The New York session is our directional move. This is our delivery session right here. Price always usually give us a strong distribution move during the New York session kill zone. So let's look at this schematic right here, right? These schematics, they're not always this linear and this perfect, but they help us understand how price may look like once we put it all in order, right? So first we may see that price give us a prior equal high right here, right? To then go higher, clear this equal high and mitigate a higher time frame supply level. Any type of PD array may be here, right? This is just a higher time frame zone that's gonna lead to create our new dealing range for our lower time frame model. So after price clears this higher time frame supply zone, price displays lower, give us a market structure shift. Price starts building internal range liquidity. We label this inducement because a lot of traders place their stop losses above these highs, thinking that price only gives a break in a retest setup, when in reality, price usually pulls deeper inside of our dealing range, right? To clear these inducements to then extend lower to clear the below of this liquidity. So the internal range liquidity has a prior highs and prior lows. So after price clears the internal range highs, best believe the lows will get cleared also. It is the same thing in a buy format also, right? We may see this happens just like this, where price give us equal lows. Just pay attention to this as equal lows. That was my fault for this editing right here. But price may push down lower, clear the equal lows to the next end higher, consolidate, as you can see, build our inducement, clear that inducement, mitigate a lower time frame zone, give us our setup for price to give us our clear distribution move during the New York session kill zone. I hope you guys are taking notes because liquidity is one of the most important aspects of trading. If you don't understand liquidity, that means you're the liquidity, right? That's the most powerful, most truest thing that like I still live by, right? Whenever I'm trading, I'm always looking for the points of liquidity. I'm always trying to see where am I trying to get where price may trap me at, where price may just may get me at, right? Because if I don't see liquidity and I don't understand where the traps are, that means I'm the one getting trapped. That means my money is going to get taken. So I really suggest everybody, right, to take notes and learn and master liquidity, right? That's all you really need is to understand market structure and liquidity. If you can understand those two right there, you're going to become an extremely profitable trader. Let's get into structure and intent, right? Structure and intent just basically shows why are we even taking this trade? What is the point of taking this trade? And how are we even able to even take this trade and anticipate this setup, right? The first thing we have to understand is our change of character, right? It may be labeled a market structure shift also, or it can be a break of structure, right? But we label it a change of character to label the trend change, right? A change of character is the first sign of intent shift. It often follows a liquidity sweep. After price clears a prior swing high, as you can see here, this is a prior swing high, price has to displace lower to change the trend because price give us a liquidity sweep. Price can also give us a liquidity run also, but the liquidity run is more of an advanced setup that I teach in the VIP group, right? But after price give us this displace lower right here, right? After this liquidity sweep, or it can be a liquidity run, price give us a clean break of this internal range low. This right here changes the trend. Price was once in a bullish standpoint, but now price in a bearish standpoint. We can also label it a break of structure also, right? When price pushed down lower to clear a prior range low, that's usually a break of structure, right? But these are just the terms, right? A change of character or a market structure shift, however it may be labeled, right? Right here, I labeled it a market structure shift. Right here, a change of character, they're like all of them are the same. Never get confused by any of these right here, right? I use all these really as the same, right? Because it's more about understanding the structure than labeling it anything else, right? The labeling is just based on different strategies. Like smart money concepts, we label it change of character. ICT, right? ICT and smart money concept, they're the same. It's just ICT is more advanced smart money concepts, right? That's just for anybody that may be wondering why is it why do we label it market structure shift, change of character, which one is the same, which one to use. Don't get involved in that right there, right? Get involved in understanding the change trend, right? The change trend. Right here for our internal versus external structure, right? Always understand internal and external range liquidity. If you don't do your top-down analysis, right? Like I state prior times again, right? The top-down analysis is what gives us the higher time frame bias. If we don't do our higher time frame bias, we can never go down on the lower time frames to find these market structure shifts or these change of characters in these beautiful setups, right? We have to do the higher time frame bias from the hourly to the H4. This is where we get our higher time frame bias. This is where we get to see is price going higher or is price going lower, right? On the lower time frames, on the M5 and the M15, this is where we go for precision entries, right? Precision entries. The precision entries, you can't skip that part, right? I have to put that in your head. You can't just scale down on the M5 and M15 and looking for setups without understanding the higher time frame bias. This right here is just a M5 model right here, right? This is an M5 model of this setup right here. Will price give us a liquidity sweep, a market structure shift, pulls back in a fair value gap to then displace lower to clear this take profit, right? This right here is a lower time frame model. But for me to find this lower time frame model, I had to do a higher time frame top-down analysis. And don't worry, at the end of this video, before we go down on lower time frames, I'm going to help you do a top-down analysis just so you can see how I go from the higher time frames to the lower time frames. So don't worry, stay tuned at the end of this video. Now let's go for this smart money principle, right? Price is manipulated to induce retail entries. A sweep of liquidity confirms direction. Boom, we enter, right? First we get that liquidity sweep, a displacement lower, clear these prior lows. A pullback, we enter at this fair value gap, or it may be a order block. This also, right, for any advanced traders right here, this also aligns with this inverse fair value gap. So you can see how much confluences was in this zone right here. So on the pullback, price pull back, mitigate the zone to then displace lower to clear the take profit lows. Now let's get into our entry strategy, our timing in zones. Make sure you take full notes of this full strategy right here, so we can go back on your charts and follow these rules right here and look for trades on your own, right? The Asian session is from 4 p.m. to 12 a.m. Eastern Standard Time. Like I stated before, this is our liquidity accumulation. This is where we can find our equal highs or equal lows and main points of liquidity. The London session kill zone open is from 2 a.m. to 7 a.m. Eastern Standard Time. This is our liquidity sweep, manipulation, displacement confirms intent session right here. This session right here is a clear manipulation session. Like the London session is where we get like some of the best reversals. Price usually clears the Asian session liquidity, the highs or the lows, to then displace lower to give us our New York session dealing range. And now for the New York session kill zone, this is the session that I personally trade, right? It's from 8 a.m. to 11 a.m. Eastern Standard Time. This is our entry retrace into a fair value gap or a order block. The New York session is usually a distribution session, right? Price usually only pulls back inside of the New York session and mitigate a zone before continuing higher. Price rarely, right? It rarely gives us deep New York session reversals. The New York session is usually a continuation of what London session did. So if you're a person, you want to anticipate the New York session, just watch what did the Asian session do and study the London session. So by the time you get to the New York session, you know exactly where price is likely to lead to. Now let's get into our time frames for entries. The hourly in the H4 is our directional bias. The N15 and the N5 is to fine tune our entries. And these are the entry rules, right? Identify the liquidity pool. There's a lot of points of liquidity. I have a lot of videos of liquidity on my channel, right? In this video, I give you guys basic liquidity points. We still have the consolidation, the sideways patterns. I put all those in different videos on this channel. So go on the liquidity or go on that full course where I go over all the liquidity pools, right? So that's number one. Identify the liquidity pool. Number two is to wait for the sweep in our displacement. If price never gives us a liquidity sweep in a displacement, that means we never have a clear dealing range, right? Is that clear dealing range that's gonna give us a confidence that like for price to retrace into an imbalance, either a fair value gap or a order block. But if we don't have that clear displacement, we can't, right? Like a price won't be able to give us a pullback because it's because of that displacement price is able to give us a pullback. For rule number 4 is to place your stops beyond the liquidity sweep highs or the liquidity sweep lows. And then we target the opposite liquidity or imbalance. We see price left this fair value gap right here and build all these interrange liquidity. After price clears this prior liquidity pool, price displays higher and give us this market structure shift. We have this new dealing range, right? From this green to this red down here, right? This red dot to this green dot right here. Price always has to give us a retrace. If we don't get that retrace, we won't be able to extend higher to clear prior points of liquidity. So we see that price displays lower, clear these interrange liquidity, mitigate this fair value gap in this lower time frame order block. Now we see that price displays higher to come and clear this buy side liquidity high up here, right? But you get to see exactly how price plays in here, right? Price first push down lower to clear these interrange lows. Then we get this extension higher to clear this buy side liquidity high. Have you guys been taking notes and following along? Let's hop on the charts and go over exactly how we look for these trades live in action. Now that we're on charts, let's get into this trade right here. What is the first thing I stated, right? The first thing is to do a top-down analysis, to go from the 4-hour or the hourly time frames, right? If you are like a day trader, from the 15 minutes and higher, stick from the higher time frames, like the hourly, the 4-hour, the daily, right? To just be your higher time frames. But for me, since I'm like a scalper in a lower time frame day trader, right? My higher time frames is usually the 4-hour only and the 1-hour time frames. I usually see my dealing range in mostly anything that I need to see, right? So let's dissect this trade right here, right? This is a trade on GBP/USD right here. GBP/USD is one of my favorite pairs to trade, right? It runs exactly like the indices. GU to me is like a indices for Forex, right? Because it runs so clean, right? So on the hourly time frames, price extend higher, clear this prior swing high to then displace lower. On the hourly time frames, this doesn't look like a clean displacement of this prior low right here. It gives a clean break of structure, right? This is the break of structure that we're looking for, right? But where is that market structure shift, right? Is the market structure shift that we're looking for? But on the hourly, you can't really see it. That's when we scale down to the 15-minute time frames. On the 15-minute time frames, this is where you see your change of character, right? This we'll call our change of character. We're just gonna label it as we go right here, right? So first, price extend higher, clear this hourly high, displace lower, give us our change of character. This gives us our first sign of intent that now we have a new dealing range from this prior high to this prior old low right here, right? Now price gives a firm break of structure, right? A firm break of structure. This break of structure confirms this old dealing range. It removes it because, like, look at this right here. This prior low was protected because this low right here even failed to take out this low. It didn't take it out. You can see this low came back, respect this fair value gap to then extend higher. This low wasn't taken out until price cleared this swing high up here. So on this displacement lower, after we get our change of character, the first sign of intent, the break of structure now confirms this new dealing range from this prior high to this prior old low. Just like I was stating, right? Everything inside of the range is usually internal range liquidity. This is where the Asian session is really building from, right? Inside of this dealing range. Let's grab our Asian session indicator. I love this indicator right here, right? I provide this indicator in the free course. Just click the first link in the description and download that free course, right? Download that free course just so you can go over all the concepts, all the points and everything, right? So this video even gonna make more sense after you watch that free course for any beginners out there. So we see our Asian session, right? The Asian session, like I stated, is a liquidity building session in, right? Is in price building liquidity, right? Price is playing inside of this dealing range. Nothing is moving. This is what we call liquidity building. It's not that we can't find quick scalps. Never put that in your mind that there's not a trade available. There's plenty of trades available. It's just the confidence behind the trade in knowing if it's gonna work out, right? If there's no confidence behind a trade and you don't know if it's gonna work out, you're simply gambling. You're simply just trying to be right, right? And that's where you always end up wrong, right? So always make sure every trade has confidence and just alignment behind it. Because look at this right here. Pretend you are just looking for a buy right here. You wouldn't even know what to look for really. But for here, you build a whole bias, right? First, price clear this higher time frame high, 15-minute break, 15-minute change of character, a 15-minute break, internal range liquidity getting built. Now what we're looking for, we want to see price clear the point of liquidity. Let's play price a little bit. Perfect, right? Now after price clears this point of liquidity, then we can scale down on the lower time frames, right? A lot of people, they run to the lower time frames, but they haven't developed a true structure yet. After price gives us this liquidity sweep, this gives us two types of positions right here, right? We know exactly where the next rally lower will be. These prior lows will be the first take profit. Perfect. And this prior old low right here, right, will be the last take profit that I'll use. You want to know why this prior low, right? For anybody that can already guess, this low right here actually came from this prior high. So this high have pushed down lower and give us this low, rally higher, liquidity sweep, break lower, break of structure, confirming our bearish reversal, pull back, internal range liquidity, liquidity sweep. Now we get to position ourselves on the lower time frames. Let's go down on the 5 minutes now. On the 5 minutes time frames, all we're looking for is just a quick retest, right? Just a quick break and a retest. We see that price give us this 15-minute sweep of the Asian session and London session highs. I'm just gonna mark it up just a little bit just so it can be clean right here. Perfect, right? Liquidity sweep. Then price displays lower. Pay attention how price respected this last candlestick. It respected it, then displaced lower. Now we're looking for a pullback where inside of a fair value gap or a order block. Price leaves this bearish engulfing order block perfectly. Your entry right here, stop loss, the first candlestick, because this is a protected high now. This candlestick didn't break through this high, so this becomes a protected high. And where you're going to target this low, first take profit, is prior low right here for your final take profit. Let's see if we can get this wick back. Price pull back, wick this in. Price always feels these fair value gaps. Let's see if we can get this nice clean drop lower here. Boom. Nice and simple. As you can see right here, first price give us our clean first take profit zone. For me personally, this 1, 2, 3R is all I need. Whenever I get my 1, 2, 3, I'm done, right? I'm done. I'm just gonna target the prior Asian lows. I never let myself get greedy for more profits, right? If you're a person, you just want more profits, take the majority of your profits here, but leave a runner, like one contract, one lot size, just a small point, right? Just so you can see if the whole trade played out. As you can see, this whole trade right here took a little bit. After price cleared this Asian lows, it even gave us a pullback, play around this zone right here. But where is the main draw on liquidity at? The main draw on liquidity was always these old lows right here. So even after price clears and mitigate this zone, it still extend lower to clear these prior lows down here. And these also, guess what, were equal low liquidity right here. Perfectly. This is gonna be it. I hope you guys enjoyed this video and got a lot of value. If you want more and want to join me and trade live with me every single morning at 9 a.m. Eastern Standard Time, make sure you check out the link in the description for Spektrades, right? This is where experience meets execution, where you're going to be trading live with me. I've been trading for 5 years since 2019, and I live trade every single morning with my students. So make sure you check out all the links in the description to either join Spektrades or book a free call to talk with me one-on-one to see exactly how I can help you. Make sure you like and subscribe down below for the next videos. This is going to be it. Spektrades out.